Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Phil Mackintosh, chief economist at Nasdaq, to review how policymakers and investors are modeling out the global economic impact of the coronavirus as we look to go back to work. Good morning, Phil. And another 4.4 million Americans filed for unemployment benefits this week, bringing the 5-week jobless claim totals to more than 26 million. That erases all the job gains from the Great Recession. However, the pace has slowed slightly. What do you make of the numbers?
Yeah, I mean, I guess these are just real data catching up to what we priced into the market about a month ago. I mean, it's sad for all the people that are unemployed, but it is good that the government is creating a rescue net for the people, and hopefully it's temporary. And I think that's what the conversation now is in the markets, turning to what's happening in the next 2 or 3 months and what the outlook looks like. So hopefully it really is temporary.
All right, let's take a look at our first slide for the day, the dash for cash.
Yeah, so this is a little bit of an interesting data point because back in March, we saw just a huge amount of volatility. We saw some risk-off days where every asset was being sold, if you remember, gold, bonds, and stocks all at once, correlations breaking down. So from that, you can imply that a lot of unusual things are happening and the risk aversion is really very high. This chart supports it. So we're starting to see some data now just to show how dramatically people were rushing out of any kind of investment and into cash. And there's about $1 trillion worth of cash held at the Fed in this period. There's other reports that show that bank deposits increased by a similar amount from investors. So just people really did liquidate a lot of different kinds of portfolios during that period, which explains the unusual returns and the extent of the returns that caused all that volatility that we were talking about back in March.
Let's take a look at our next chart here, as we do each day, the COVID-19 data in the U.S. And Phil, it was interesting yesterday with the market being sharply higher, we noticed that spike in the number of COVID-19 cases, but there really wasn't much conversation around that. And we couldn't figure out why. But towards the end of the day, some of that started to trickle in.
I know. Where'd the spike go? It's disappeared. What we think happened was all of the military cases were added just for one date. Which is kind of similar to what China did back early on when they changed the way that they calculated new cases as well. And it just created a really weird spike on a single day, which for a while confused everybody. What looks like happened is what should happen. They've allocated the new cases in the military across all the previous dates. So now we have a lot of days where we have over 30,000 new cases. But the good news is the downtrend that we're starting to see is not broken. And so we're sort of 15 to 20% below peak levels now. And starting to tackle this problem.
And that certainly is encouraging. So moving along here, taking a look at Europe getting back to work.
Yeah, and that's where the last chart's kind of important because we're only 15 or 20% below peak levels. You can see from some of these charts that a lot of the European countries are now well below 50% below peak levels. And importantly, that bottom left-hand chart shows that a lot of the European countries have much lower death rates than the rest of the world. And that's important because it's meant that they're able now to start to talk about getting back to work seriously. Some of them have started this week to open up their economies again. It's interesting to look at all the different policies, and that's what the chart on the right is just highlighting, is everybody's view of what's an appropriate first step is different. Should schools open first or last? And universities and zoos and museums are all probably high-risk places, but getting stores open, getting people back to work, in those small businesses is pretty important. And so each country's got a slightly different approach and they've all got slightly different dates to start and stop, but at least they're starting. So, that's a good test study for us to watch as well.
All right. Now, if we take a look at our next slide here, when will different states open up in the United States? And it's pretty interesting when you look at the timing that's recommended versus some of the states that are talking about coming online earlier than suggested.
I know, isn't it? I mean, Georgia is in the news today because they want to come online pretty much straight away. Even Trump has said it's too early for them, and they are one of the black states in here, which is a June 10 or later start date. It looks like the West Coast, and we saw Seattle was one of the first states affected, and the Californian region seems to have not been so badly affected, are able to open up as soon as May 10 on this model. And Chicago, another massive city, seems to have avoided the worst of the crisis too, which is interesting. But those dates for the US are obviously 2 to 3 weeks behind Europe, which we'd expect because our peak cases was 2 to 3 weeks behind Europe. And all things going to plan, we don't see a reignition of cases in Europe as they go back. The protective measures that Europe is using, like face masks, sometimes tracking apps, just keeping distance in things like restaurants and bars work. And we can all start to look forward to a future which is more like the past.
All right, let's end on a positive note, like we do on Trade Talks, talking about the market cap of Nasdaq listed stocks. And this actually has nothing to do with COVID-19.
Not too much. The fact that the MSCI World fallen as much as it has is because of COVID. And interestingly, Nasdaq stocks, because they're new world stocks, have not fallen that much. And a lot of the tech stocks like Amazon and Zoom and Microsoft are actually doing pretty well out of the Corona crisis. But this is super interesting, and it shows that the Nasdaq's listed market is almost as big as all other countries in the MSCI World Index ex-America. And I think what's important about this is it shows the attractiveness of the US equity markets for capital formation compared to other countries in the world.
All right, Phil, great to have you with us as always. Thanks so much for joining.
Thanks, Jill.
All right, thanks for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.